My name is Ian Walsh. This is the Moment Money Matters, Hard Money Bankers. Joined today, Carl Scaramuzza. How are you, my friend?
Awesome, awesome, very awesome.
Good. I appreciate you having coming on. Appreciate you had reached out to me, and I noticed you guys have a really good social presence. You're doing a really good thing. Marketing, just kind of the same stuff we do. You're just out there every day, and really, that's what business is, right? I'm in hard money. You're in, the credit industry, but the reality is, it doesn't matter what widget we're selling, right? It's marketing. That's what we're in.
Got to get in front of people, right? You got to build that audience. That's key. So, for
All the
sure.
time, man. So, what I like to talk about with people watching this, we have a lot of investors and a lot of people that, and I always get this question, especially in my world. It's like I always get credit questions, cash credit, cash credit. Like real estate, it's just cash and credit. So you either have one, the other, neither, or both. It's good to have both. And I wanted to discuss a couple of things with you. I wanted to talk about people that like how their credit score can be influenced or how you guys look at credit. Quite frankly, you would think what I do that I know a lot about credit. I don't. I know what a credit score looks like. I know the story of like a credit history, but I don't know those ins and outs like you guys do. And most of my lending is asset driven. So do I do loans with somebody at a 500 credit score? Yeah, I have. Would I rather do them at people with 7 and 800s? Yes, I would. So,
Right.
but I'd like to get some insight. I know as we were talking, or we had exchanged some notes and so forth. What kind of clients do you guys get in this marketplace? Like, what do the clients that come to Credit Blueprint look like?
Yeah, I mean, the majority of them from the time we opened the doors up 7 years ago are first-time home buyers. A lot of first-time home buyers. We get this call all the time. They've been renting for 10 years. They're counting that rent over 10 years. They're seeing how much they pay to a landlord. They haven't, built any equity up in the property. So that's kind of been our stronghold there as first-time home buyers. However, we're starting to get into helping clients that have a 700 credit score and want to take that to the next level. They want to get to that 850 credit score. I always say, you got to check your credit ego at the door because everyone's too cool for credit repair, right?
Right.
Got a 700 score, 750, I'm good, but there's room for improvement. You can be great with your credit.
Yep.
And one of the reasons that you'd want to be great is cushion, right? If you have an 850 credit score and something shows up on your credit and you lose 100 points, you're still good. You're still in the sevens. But if you got a 705, that 705 drops to 620, 630, 640, totally different ballgame.
It is a different ballgame. That's an interesting comment because, yeah, I guess check your credit ego at the door is a good one to put it because, first of all, when you come into this business, the real estate world, if you're looking at credit in the way that with an ego and like, oh, well, I had this, I had that, and it should be this number, you're crazy. Like if you have the option to bump yourself from a 7 to an 800 to 650 to 750, it's just a tool. Like it's just a tool for an investor. Look at it like that. Don't look at it like a personal dig or hey, why isn't mine good? It's not personal. You should use that and accelerate it to as high as you can because I mean, I don't really use credit much, but I like it. But when you go to like an FHA or a bank and you go, the difference between like you said, a 620 or 640 and a 720 or 740 is two different planets. Give yourself the opportunity. Don't box yourself into a corner. So you got those are your typical clients that approach you guys. Something you mentioned in your notes, and I don't know if this relates to what you were just discussing, but elaborate on the FICO pie chart.
Absolutely. Yeah, the FICO pie chart. There's some companies out there that'll tell you they know what this FICO algorithm is, but the FICO pie chart, really, the two most important things that make everything up are making your payments on time. 35% of that chart's based on making your payments on time. That's really, really important.
Okay.
Right? Um, Hard to help that type of client that can't find a way to make the payments on time. If you got bad habits and you can't find a way to be inside that 30 days late, best advice I would give that client is to, schedule some kind of payment where it comes out automatically and you're not waking up on a Friday thinking about your car payment or your credit card payment or your student loans. Just set it and forget it. That's a nice way to kind of break that habit. As far as the next bucket, like 30% is called revolving utilization, which is really about your credit cards, what your credit limit is in relation to your balances. So if you look at that chart, Ian, right? 35% is making your payments on time, okay? And then 30% is your credit card. So 65% of that chart, you can really say relates to credit cards, what your balances are, what your limits are, and making those payments on time. it's a huge, huge piece of the puzzle. Just recently did an interview with a realtor who we were talking about, what moves the scores up and down. And one of the things she thought was her home equity line. And that's not the case at all. You can have a home equity line of credit. People always think, oh, I got $40,000, $50,000 in debt, and let me get that thing paid down, and that'll help my scores. But it won't. It wouldn't move your scores at all. Same misconception with a mortgage, right? If you have a mortgage, people always go, well, my credit should have went up last month because I just paid down my mortgage. There's $150,000 left. I paid it off. I own the house free and clear, but my scores haven't moved because it's not revolving utilization. It's not going to move the scores.
So my takeaway from that pie chart is two things that are very interesting. The fact that 65% of your credit score is driven by those two things, that's huge. And two, both of those things are completely in your control if you have somebody guiding you, right? Like, it's not like you have something that's out there in outer space that goes, oh, I don't know what to do. I mean, those are two disciplined things that you can simply make choices to be in a better situation for. Like, that's it, right? There's nothing else to it.
That's it. And with that pie chart, which is really interesting, right? Here's another piece that's away from it. You can actually make your payments. I've looked at these credit reports. So I've been doing this 20 years now. And I can look at a credit report that has 7 pages, no late payments whatsoever, but that credit score is still in the low 6s. So basically what it tells you is if you're making your payments on time, but you're mismanaging your credit cards, you'll never have that 700 or that 800 credit score.
And you don't know any different unless you simplify. I mean, it's a good way to simplify what you're talking about. That is a simple way to go ahead and make a major adjustment in your potential and what you can do. Like, I know you mentioned in your world, a lot of it's FHA, and for sure, getting into a house. But from investors that watch this, like, the same thing holds true. Like, that little tip right there could give you a 100-point bump, could allow you into a loan that you weren't going to be able to do, and just made you an extra $100,000 on a flip. Like, it literally could work like that. So, little tip, $100,000 tip is what I'll call that. So, Carl, how do people get ahead? Obviously, you guys are creditblueprint.net. I love it. You guys, marketing's good. What's the shirt I've been seeing? Credit cocky.
Credit cocky. We want our clients credit cocky for sure.
I like it. I like that buzz line. How do people get a hold of you though if they want to get a hold of you? Okay, right there. There it is, man. So is there like an email or anything? Website? Well, obviously the website's creditblueprint.net.
Yeah, they can always just fire me an email, Carl, CARL at creditblueprint.net. Easy way to get a hold of me. Yeah.
Perfect, man. We'll join up here on the next video. And as you guys know me, Ian at hardmoneybankers.com. And we'll go into the next one on some of the secrets, tips, and tricks and things that Carl can help with when you're trying to improve your credit.
Thanks, Ian.